In this video, I share the top 8 cryptocurrency tax problems. I'm going to share what I found in my 5+ years helping individuals and businesses with their crypto taxes during my 17 years as an accountant. The problems I cover apply to investors, crypto traders, miners, and others in crypto-related businesses. Be sure to watch all 8 crypto tax problems and their solutions to avoid getting blindsided by the IRS or your state tax authority. Sometimes people don't know what they don't know. In cryptocurrency and taxation, that's more true than in most other areas. If there's a big, ugly cryptocurrency tax problem out there you think I missed, please add it to the comment section below, and I'll be sure to follow up with you. Cryptocurrency tax problem number 1. IRS demand enforcement letters, audits, penalties, fines and interest up to $250,000 and up to 5 years in prison. IRS letters have gone out to tens of thousands of people who had crypto transactions in previous years, but never reported them. This normally means enormous fines, penalties, and having a severe fraud problem with the IRS. That is, if you failed to report or underreported your cryptocurrency transactions in prior years. If you do not receive or respond to an IRS letter, the tax account you have at the IRS may be examined by an IRS agent. So here's an example of IRS letters that are going out this year and have gone out in prior years. We're writing to inform you we have information that you have or had one or more accounts containing virtual currency and may not have met your U.S. filing requirement. Intend to seize, levy your property or rights to property. Due immediately, $110,000. Notice of intent to seize, levy your property or rights to property. Due immediately, $139,000. We are proposing changes to your prior year's Form 1040 tax return. Proposed amount due, $289,000. So you get the idea. Nothing paints the picture clearer than an example. The current 1040 income tax form has a checkbox that asks at any time during the year, did you receive, sell, send, exchange, or otherwise acquire any financial interest in a virtual currency? If you check no to this question but had crypto transactions for that year, you're filing a fraudulent tax return. Taxpayers can't hide any longer. A number of people falsely believe that crypto is so anonymous that compliance is not enforceable. Some people believe that this is enough of a Wild West that they don't have to report, or worse, a refusal to report completely. You probably know the IRS went as far as to issue a legal demand to Coinbase, one of the largest cryptocurrency exchanges, requesting the release of transactions from prior tax years. This helped the IRS find taxpayers who did not report their crypto transactions, as legally required in prior years. You see, an audit of the blockchain is the easiest audit for the IRS to do. The IRS recently paid over $10 million to a company called Chain Analysis that runs an analytics on the blockchain and identifies tax fraud, that is, non-reported or underreported virtual currency transactions. Now, crypto transactions are more transparent, easier to track than even physical cash, which can't be tracked on a computer. The easiest way to solve this problem is to ensure you disclose any and all your crypto activity when filing your taxes. So, what do you do if you didn't report all your crypto transactions or didn't fully report them? Well, if it was an honest mistake or you just looked over the need to disclose those transactions, it's best to amend those returns in prior years. where you failed to report or underreported. If you wait until Uncle Sam finds your transactions, it's going to be a lot more trouble for you than if you're proactive. Amend previous inaccuracies and come clean now. Because if you just acknowledge, I made a mistake or I overlooked something and come clean by amending your returns, it looks much better and you'll likely have a much better outcome. However, if you wait until the IRS eventually finds your prior tax returns that hid income, hid gains, or failed to disclose any transactions that you're required to disclose, even if it was some years back, it could be considered tax fraud by the IRS and the consequences much higher. If you feel you're not capable of doing this effectively yourself, and or it's something that could take you days or weeks of frustration to labor over to complete accurately, then go and get some help. So, I'd really like to know, do you or someone you know got into trouble with the federal or state tax department due to a virtual currency transactions? Please let me know in the comments section below. Also, let me know if you're aware of other strategies the IRS is using to find crypto transactions that went underreported. If this video is opening your eyes in any way or just cemented what you already are aware of, please like this video now.